I'm Rich Harvey from Property Buyer. The COVID crisis has created an unprecedented shock for many of us. We're in a situation of huge government handouts, unemployment rapidly rising, property prices and rents are being negatively affected, and tenants are having trouble paying rents, with a nationwide ban on evicting tenants who don't pay their rent. Landlords and tenants need to communicate with each other. If there's a property manager involved, ask them to keep you in the loop. All parties should check whatever guidelines and legislation is relevant for their state, so that any solution you agree upon doesn't contravene those guidelines. And landlords also need to check carefully their insurance policy to make sure that whatever you decide upon the rent doesn't disqualify you from claiming your landlord insurance. Rather than just focusing on contractual obligations, both parties should also consider what's the right thing to do ethically and morally. So, what's a property investor to do in this time? When it comes to buying or selling property during an economic crisis, there's three options. You can panic sell, you can buy more, or do nothing. Let's take a deeper dive into those three options now. Firstly, panic selling. Well, this is the worst thing you can do. As an investor, you have to maintain a long-term view. There's always going to be ups and downs in the market, just like the share market. If you're struggling financially, apply for the JobKeeper or Job Seeker payments. Renegotiate the interest rate or loan terms with your bank and take advantage of the 6-month loan repayment holiday. Some investors may feel they want to panic sell, but with these initiatives in place, there's no need to do that. Option number 2 is buy more. If you're in a secure job and have got good cash buffers or a line of credit, then perhaps you're in the ideal position to take advantage of a softer market. Money at the moment is cheap due to ultra low interest rates, so it's a no-brainer to borrow money and purchase more real estate in a quality location that's selling well below market value. In the past 6 weeks, I've bought several properties for my clients and got a 10 to 15% discount to market value. I remember back to the GFC in 2008 when I bought several properties, which are still part of my portfolio today. The key is to have your finance pre-approved in place and look out for those opportunities in the coming months. I believe the next 3 months are going to provide the best buying opportunities before we see a stronger recovery in early spring. And the third option is do nothing. Now, this is the approach majority of investors are taking by adopting that simple herd mentality. The typical line I hear from most investors at the moment is, "I'll just wait and see." But what exactly are they waiting and wanting to see? They're wanting the perfect conditions, which are pretty much here. We've got low interest rates, we have motivated vendors, a softer market, and predictions of a strong market recovery down the track. In hindsight, we'll probably find that the winter of 2020 was the best time to buy. But the main risk of investing now comes down to finding a good tenant. Even if you reduce your rent, say 5 or 10% to attract a tenant, this short-term cost will far outweigh buying a property at a substantial discount. But remember, this COVID crisis will pass. It won't take too long for the property market to rebound, unlike the GFC, which caused a major financial recession. This shock's been caused by a health crisis, and once COVID is under control, then the economy and the property market will start to get back to normal. Thanks for watching. I'm Rich Harvey.